Hello, welcome to the Seven Figure Podcast. I'm your host, Thomas Edward, and with me today is Josh Belanger, currently writing Hot Money Trader.
That is correct.
So how are you doing today, Josh?
Perfect.
So you bring a pretty awesome wealth of expertise to SFP, and Hot Money Trader is just an awesome editor of ours that I've been following now for a little less than a year, but it's been going great. I mean, you've been killing it, like just killing it with these flash alerts and quick gains. Tell us a little bit about you yourself, how you got started in this business.
Yeah, so I got started when I really didn't know what I wanted to do. So when I was young, I was really unsure about where I wanted to go in life. Mm-hmm. My mom never really sat me down. My family was never really somebody to say, hey, what do you want to do with your life? Mm-hmm. I grew up in a little bit of an unstable house. And that stuff wasn't just really part of their lives. I mean, my grandma lived paycheck to paycheck. So that was kind of the thing that I knew. My stepdad was a construction worker. So I was lost. I was going through a tough time, and I was delivering pizza. I ultimately wanted to be a professional wrestler, and that's what I trained about 3 years to
awesome.
do. Yeah, I mean, that was my dream. I wanted to be in that big stage and entertain and to do that. Yeah. And I had trained in Chicago with a trainer named Sonny Rogers for about 3 to 4 years with my uncle. That's how I got into it. My uncle, my stepdad's sister's brother, my uncle by marriage, was involved with it, and that's how I got started at such a young age. I was doing it, and I realized it wasn't really... I didn't have like a good role model at that time as a young age. Mm-hmm. And the confidence that I probably should have had, I didn't, and I didn't focus. And I see this with a lot of traders and our members now. It's tough to stick through the tough times. Mm-hmm. And when I had a tough time in professional wrestling, I didn't stick through it. But that's ultimately how I found my way into the Chicago Mercantile Exchange. I was delivering pizza because you make no money as an independent professional wrestler. You usually have to pay your dues, and you do pay your dues, and you make no money. So you have to find other means to survive. That also is about being able to work those events when they come available.
Yeah, that's awesome.
So ultimately, a couple storefronts down from the pizza place was a Edwards Jones office, and I one day was with my boss at the pizza place, and he had said, man, if I wasn't doing this, I'd be a stockbroker. And just like that was my, they say those aha moments, but I'm like, that's what I want to do. Wow.
So I love the wrestling, by the way. Me and my friends WrestleMania is in Baltimore here where we're at, so we're going this year. So what you said it just clicked for you. How'd you get into it? What was like the first steps you took to?
Yeah, so at that time I knew that professional wrestling and being on the road and what I saw as professional wrestlers and how they have this time. It's like NFL players. They have a moment of time, and then afterwards it's tough for them. Mm-hmm. They don't know what to do. There's a good movie called The Wrestler that was with the actor that I thought he should have won an award for.
I know, right? He killed it that movie.
Yeah, but it was a really good look at like a life of the afterlife of a professional wrestler. Mm-hmm. Some superstar that is now not a superstar and is wrestling independently and making breadcrumbs. Mm-hmm. But at that moment when he had said that, I'm like, that's what I want to do. So I went down to the Edwards Jones office. I was like 19 years old. Mm-hmm. I said, Russ. Because he had come in a few different times. I said, I want to become a stockbroker. And he looks at me and he's like, okay. He's like, do you have a book of business? And a book of business means like, do you have clients? Like, if a stockbroker, you have customers. Mm-hmm. And obviously I didn't. And he's like, do you have a Series 7? I'm like, no. And a Series 7 is this a financial license to be able to practice? And I'm like, no. He's like, well, okay. Well, I used to work on the floor of the Mercantile Exchange, and
yourself or
that's what he said to me. And I said, okay. And he's like, I think that would be your best opportunity to get into this business because I didn't have a degree. I wasn't going to school. I didn't want to go that route. And that's why he said that going that way, which I would refer to as the backdoor way of getting on the floor now, he said, I don't know anybody, but that's the best advice I could give to you. And I'm like, okay, good enough. So then I went home, and then I went on there wasn't Google at that time. There was the internet, but it's like web TV or like dial-up stuff. It was kind of slow. I think SBC Global or whatever the heck we were using then. But I had typed it up and I found all the firms and I cold called all the firms, and I went through each firm at the Chicago Mercantile Exchange, Chicago Board of Trade, Chicago Board of Options. Finally, a firm in the CME called me up, said, come in, interview. Went and interviewed, thought I had it, didn't get it. I was really bummed out. And then about 6 months later, they called me back and said, we want you to come in and do another interview. And then they gave me a job as a runner.
Awesome.
Yeah.
As a runner?
As a runner.
So did you get your Series 7 or did they help you get that? Or
No, so like getting that moment as a runner, you're like, wow, so I'm working on the floor and it's all this excitement and people are screaming and yelling, and it's organized chaos. But when you're on the floor, there's an energy that you get, and it's just at that moment and that time, because the floor now is pretty much dismantled because everything's electronic trading on servers. So at that time, you're on the floor and you're hearing all this buzz. That's probably a better word, a buzz. And as a runner, you're like, okay, but if you did anything wrong, you were fired. I mean, like the janitor had more weight than I did. So like I had to make sure I did my job fine, and running was getting the trading cards from the runners in the pit. Now, when there's stuff going on, and they also intentionally, kind of like break you in, but like they'll elbow you and they won't let you in. So like you have to get into the busy pit, which is like the S&P 500 or the Eurodollar at that time. The Eurodollar was actually the busiest pit. You would have to go in, and there's probably 200 people in there. So you have to go up all the way up to the top to get to the one trader that you're getting cards from. Wow. So it's sometimes a little tough, but that was getting into the business, breaking your way into the business. So that's why he said that was your best way of getting into it to me.
Wow.
Yeah, so getting the Series 7 was down the road. That was kind of getting my foot in the door. And I leveraged that experience and knowledge, and I went to another firm, and then another firm that eventually sponsored me for my Series 7.
Awesome. How long were you a runner? How long were you doing that?
So I was running for about 8 months, and I realized that when I was looking at other people, that the floor was, it wasn't the same as it was before, and that things were changing. And things were changing for electronic trading. And at that moment, I'm like, well, I've seen a lot of people. I became friends with some people, and I would look at them and say, oh, they've been here for like 4 years, and they're still a runner. Or they've been here for 6 years, and they just finally became a clerk, which is like kind of an assistant to a trader. Or it's been 10 years, and they're a clerk for 10 years, and they're still not a trader. So I said to myself, wow, I don't know if I want to go down this road. I need to figure out where I want to get. And for my conversation before, being a broker, that wasn't being a broker, that was being a runner or a trader on the floor. So I used that to get the piece to be able to move on the board, to get in the position to be appealing at my age to a firm to be able to sponsor me to be a broker. Awesome.
Cool. So that's an awesome segue to get into the brokerage experience that you have. So tell me a little bit about that. There were some things that you may have uncovered doing some brokerage stuff that you talk about today.
Yeah.
Can you tell us a little bit about that?
I hate it. That's where I wanted to get to. Where I was before was where I wanted to get back to.
Okay.
But you never know until you do both and have that experience. But I quickly realized it was a salesmanship job. I was making, I was almost not like the movie. All movies are kind of, or not kind of, always over dramatic. But boiler room, a little bit similar. So I was making a lot of calls, trying to open accounts, and just going through numbers and just trying to get, to get interest from people, and then to pitch them our stocks that we were doing. So, and then I eventually would ask questions that would be like, "Hey Tom, what do you think of the market today?" Like someone who was on the phone asking me like, what do I thought of the market? And I would be told that it doesn't matter, you just need to open accounts. I'm like, okay, well, I really wanted to become successful in the financial markets, and I don't know if this is really something I shouldn't know, that I don't know what was going on in the marketplace. So it's very contradictive, and that's just how really the brokerage business is. It's just that you can't be successful at selling and also know the marketplace as well.
Right. So that's when you transitioned into doing more research about the markets, digging deeper.
Yeah, that's when I went to a trade desk.
Yeah.
I started working on a trade desk.
Okay.
And that's what I liked more. I was trading for a firm. I was trading options. I was trading bonds. I was trading stocks. When I became a broker, one of my best stories is that one of the things on the Series 7, the exam, is it's a bunch of regulations and different things like bonds and stocks and so forth. One of the things that a lot of people have problems with, which is really why I focused in on this, is options. And it's not just professionals that have problems with options. It's also our members as well.
Yeah.
And so
it's very complicated. It's like a step up from just like getting your feet wet and investing. Like I think people understand 401ks, their retirement accounts, but options is just like another level up. So can you talk to us a little bit about that?
Yeah, so I think of like stocks as checkers and then options chess. And if you look at it like that, then you kind of go, oh, okay, well, some people like playing chess. And if I used to know how to play chess, I was never really good at it. If I sat at a chessboard now, it'd take me some time to learn it again. It's the same thing, I think. And it's just, do you really want to play chess or do you want to play checkers? If you want to play checkers, that's fine. You just need to understand how to play checkers the best you possibly can. If you want to step it up, then you play vice versa, checkers or chess. So when I was taking the Series 7, I focused in on options and I was really like blown by it. I'm like, I did really well on it, on that part. And I'm like, wow, I could take my $2,000 and I could like make a lot of money. I could triple it. So as a professional, I'm like, I passed it really well. I got my exam, and I have all the money that I have is like $2,000. I'm going to buy some calls at the time was BlackBerry. It was really popular, the BlackBerry devices. And it was a play on earnings. And the Series 7 doesn't teach you all the intricacies of options. It's just very vanilla. And this is where I think a lot of people get caught, is because they look on a Google and they see, oh, well, a call does this and I'll just buy it, almost thinking like it works just like a stock. Directionally, it does, but mechanically, it doesn't. It's like a watch.
Yeah, what do you mean by that?
Well, let's say like a Rolex. Rolex is a winding watch. So if it stops, you wind it back up. Now, you could have a quartz watch, which is like a battery, and you just put it in there, and if it stops, you can't wind it. You got to put a battery in it. So it's the same thing. Like stocks have a different way of how they work, and it's the reason why they cost more money. But then options are just a kind of derivative of that, and they are a derivative, but it's just a form of being able to do the same thing, just at a lesser cost. But
instead of buying a full stock, you can put in $10, $20 and do what?
Yeah, so like it would be like if we, instead of buying a stock for $100, we could get the same thing in similar ways with an option and do it for a tenth of the price, so 10 cents, or if it was $100, $10 or $15, depending on what we're looking at. So it's just, that's the trade-off of risk and also leverage.
Right. And so you're taking that $10 and you're saying the stock is going to go up or going to go down?
Yeah, so with BlackBerry, I took all my $2,000, which I was very over leveraged. I mean, like if that was comparison to using stock, I mean, we would be talking like at that time like $20,000 worth of stock. That's just over leverage at that point. Now $2,000 doesn't seem like a lot, but when you compare it that way, and this is where a lot of people start getting jammed up on stuff, is that, oh, if you quantify it into stock, wow, that is a big position, and that's why I can't use all my money on one position. So with me, I did it, and I lost all my money the next day, which was fast, because it happened fast. It's not like a slow loss, but the fast loss is like a Band-Aid ripping off. And then I realized, wow, as a professional, I don't know all the things that I thought I knew about options, and I need to know more. And that's where a lot of my questions came from. That's what the question about, like, what's the market doing? So I would ask questions of like about options and things of that sort. And I always pretty much got the stiff arm of like, don't ask.
Options trading, like you're talk us a little bit about like your service that you're doing now, Hot Money Trader. What is the gist of it? You're taking a lot of this experience that you've learned over the past so many years, and you're applying it to your writing, and you're writing to our customers. Tell us a little bit about that.
So the journey that I've had within the finance spectrum is unique and something that I value so much, because I did work on the floor and I was on the financial services and I saw how the sausage was made both ways. And a lot of people are only one way or the other. And being able to see both sides of it and knowing what I liked and what I didn't like, it brings an expertise and a knowledge that a lot of people are not able to accumulate, even if they have a degree and they go to a Goldman Sachs or they go to a Citigroup and they work on a trade desk, a big name firm. So when I was on the floor, there are local traders. Local traders are people that trade their own money. And there are certain times that they would come in and start trading. Now, me not knowing much about anything, I'm like, why? Why are these people coming in at certain times? In the older days, you only had one pit, and a pit was where the central location for people to trade. So specifically, in the previous days, when it was when you had to call on the phone and enter your trades, back in the 80s, there was a central location. It was one pit. What happened was that there was other locations that opened up there, and then there was the CME and the CBOT and the New York Stock Exchange and all these different places that spread what would be order flow. So you would be able to then, a broker would call, they would execute an order maybe in Chicago and then maybe in New York. So you didn't have that as a market maker in a pit. Somebody in the pit, you wouldn't be able to see if someone stepped in and bought a large amount of something that would be unusual, would be interesting. Someone comes in, let's say on a poker table, or let's say just like on a blackjack table. Well, let's do roulette. Someone comes in, all of a sudden they put a $10,000 chip on black, and you're standing there. Guy comes out of nowhere, just $10,000 black. You look and you're like, that's pretty interesting, right?
Right. Like, why do you do that?
Yeah, why do you do that? And then he hits, and you're like, wow, this guy probably knows something, and then walks away. So in a situation like that, and maybe it never happens, or maybe you're at the roulette table again, and some guy comes up and does that big bet again, you're going to be like, wow, this guy probably knows something. That's a very generic approach, but in the financial markets, the only way to make money is for something to go in your direction. So if someone buys a stock, they have to have that go in that direction. If someone's buying a call option, because of how call contracts work, they have a certain amount of time and a certain price that it must go to before it either expires or they can cash out and make a lot of money. And a lot of money being because of the leverage that they're having. So on the floor, I would see sometimes people coming in and just trading and then leaving. And I would be able to get their tickets, and I would see, like, what's going on. Like, I could see people up $1 million, I could see people down $1 million, I see all kinds of different stuff. So I started learning about that and understanding, like, people just coming in and just trading, and when Goldman Sachs would come in and make big trades, people would then jump in and follow them. And I started understanding, like, order flow and why certain people would only act on certain things. So that really kind of started the basis of, like, there's got to be some informed people that know things. So when I started learning about options, when I was a broker, one of the accounts that we would open a person on an account would be a company named Chesapeake Energy. So Chesapeake Energy was founded by Aubrey McClendon, and I think he was a co-founder. It was him and another guy, and unfortunately had passed away a couple years ago. But Aubrey McClendon was one of those CEOs that just loved his company. I mean, he just loved his company, and he always bought stock. Now, people buy and sell people buy for one reason, and they sell for many different reasons. Sell to take profit, sell to take a loss, whatnot. But if you're buying because you believe that the price is going to increase. So we had backtracked the fact of every time that Aubrey McClendon took purchases of shares and tracked that performance in a short amount of time. So I started using the options market to use that as kind of an overlay and a talkative point.
Kind of systematize the
options market. Yeah. So then when more trading went to electronic exchanges, we were able now to find these orders of these big bets in the options market and use that same analogy and use it on a shorter time frame with options and narrow it down to, why is someone making a $5 million bet that expires in 30 days on whatever stock it is?
Right.
That's interesting. That's like the guy coming over, setting $5 million, or saying whatever $10,000 on black and just walking out of the blue and then walking off.
Yeah.
It's just kind of odd. In a sea of people, someone comes in, places it, and then walks off. That's interesting. That's interesting to me. And again, in the financial markets, you only do something if you think something's going to happen. Like, no one's in the business to lose money. No one's wanting to put that type of money on risk in a short amount of time without having some kind of hunch. So you start to put those pieces together, and then you start to think, wow, okay, things happen. That happened with that, someone made that bet, and then a couple days later it spikes higher, and they're somehow ahead of the news, or somehow ahead of some upgrade, or something that had happened days after, but had this activity days before. And it always happens in the options market because, one, it's hidden. No one's really looking at the options market. And two, it's the leverage.
Wow.
So instead of buying stock, which is a limited supply, you are able to use the options market to make that same directional bet with less money. And maybe it doesn't work out, because sometimes it doesn't. Sometimes the market reacts differently. But if you have information that you really think, and it's not always illegal information, it's sometimes people overhearing things or having a good hunch, good research.
Not always illegal information. What do you mean by that?
Well, a lot of people think insider trading, and they hear about it. It's a very gray area on what insider trading is. People think Martha Stewart got jammed up for insider trading. She didn't. She got jammed up for perjury.
Right. So they thought insider trading was actually perjury.
Yeah, they were talking to her about insider trading.
Okay.
About her buys and sells, but she didn't get jammed up for insider trading. That wasn't the reason why she went to prison. She went to prison essentially for lying for a statement that they said that she lied about.
Interesting.
And it had nothing to do with the fact of insider trading.
Wow.
Steve Cohen is another individual that has really rode the middle ground on what insider trading is and isn't. And a lot of times, if you are like Cohen, we'll just backtrack it. The reason why people get this kind of information is because there's always looking for an edge. Knowledge is money, especially in the financial markets. If you know something that isn't priced into the marketplace, you have almost like a piece of gold. You have dollar bills that haven't been accumulated yet, because you can go out and place that bet on that knowledge, and if it pans out, you could be in for a windfall.
Yeah.
With hedge funds, with private investors, people that have an edge, or people that are always seeking an edge because their business is about performance, people are going to, it's like baseball. People are going to, unfortunately, there are laws and there's laws and restrictions, but even in professional baseball, with people knowing the limits of all the things that they can't take, people still try to find a way to get some kind of enhancement to help them in their performance on field.
Right, and that's essentially what Hot Money Trader is about.
So we're finding these types of bets, but we're not doing it the same way they are. We are executing our bias on the fact of public information. So when you place a trade, I can see that real time, and I can see that real time because I pay for, and it's a lot of money, data from all 16 exchanges. So this is like an institutional type of product. So this data comes, and you have to be able to filter it with an algorithm and to be able to identify all this kind of stuff. So for instance, there's like 22 million option contracts that traded yesterday. This is equivalent to like $4 billion in derivatives. That's a big chunk of change right there. Quote-wise and everything else, that's a lot of data going through servers, and you can't identify that with the naked eye. You can't look at it like, open up a stock chart or a stock, type in a stock and then look at the option chain and be like, oh, okay, find this one, and go through all 2,000 optionable. Right. So you have to have a system.
A trained individual looking at these numbers.
Well, the trained individual is a server. It's an eye. It's an electronic eye that's just staring at the orders. So the algorithm picks it up, and it's looking at it real time. So it's executed orders. Executed orders are important because that's public information at that point. An executed order means that someone placed this trade, and it has to be for how the market structure is, report it, because that's public. That brings transparency to the marketplace, and why we have so much confidence in the marketplace, because we can see when people are buying and selling, and we have that access to liquidity right away, or access to the markets during the market hours.
So yeah, give me an example of one of these trades you executed this year, because I'm watching them, I'm seeing these flash alerts, and like next day things are going up twice as high as what they were when you called it.
One of the ones we just had recently, we have a couple. The one recently that we had was Apple, and it's kind of different because usually we're looking for plays to the upside. But with Apple, we played it with a put option, and we bought it on a Friday. Now, it was earnings, and it was a little bit disappointing, but one of the things that I saw was that we were seeing some buying in the March contract. And March, from that point, is a couple months out, and they were buying a lower strike. Now, that had some time to play out, but I was also seeing some order flow as well for some short-term options. So we actually jumped in on that on a Friday, and then on Monday, we cashed out for 50% profit.
Nice.
Just like that. Now, the stock then rebounded a little bit and then has collapsed then, so those options would have gone up a much higher. But, for over the weekend trade, a one-day trade, that's pretty good. And we just never know. When you get gains like that, you got to take them quickly.
Yeah.
Another one we had was in Tenet Healthcare, which is a THC, and I believe that one was up 300%. So we had a really good spotting, and those are the ones I really like because no one's following THC. The ticker symbol THC.
Right.
Tenet, and that's where we kind of identify this unusual activity. When we're looking at something like Apple, that's a little tough. Tough because there's a lot of liquidity. But when we see something like Tenet Healthcare that typically trades X and all of a sudden trades 10 times that, wow, that's pretty interesting. And then 10 times that being that they're just in there buying one specific strike in a specific month. That's a lot of money on one strike at one moment. That's that person coming in, putting the $10,000 on black, and if you don't know what you're looking for, you don't see that guy. But if you do, we can see that guy. And for me, I want to follow that guy because that guy knows something probably. And that guy did know something because the prices, I think, went up on the stock about 10%, maybe 10 or 20%. But the options outperformed that by 300%. And we're able to sell into that move, capture that move, and walk away.
And this is all to subscribers of Hot Money Trader.
Yeah,
that's awesome. Well, hey, Josh, thanks for visiting today. We got to do this again. There's still a lot more, I think, to your story that we can talk about. So if anyone watching wants to learn more, visit sevenfigurepublishing.com and look up Hot Money Trader. Thanks for joining me today, Josh.
Awesome. Thanks for having me. Until next time.
Until next time.